What's up, everybody? Welcome back to your monthly market update. My name is Michael Miller, and we are going to talk about all things real estate today. We're going to go national and we're going to go local. So if you want to stay in the loop for some of the best information on the current real estate market, make sure you like and subscribe below. All right, let's get started. I don't really know what that accent was. I'm sorry. Okay, so we're going to talk about mortgage rates because we always talk about mortgage rates. Everybody loves to talk about mortgage rates. This graph that I have for you is really interesting. We basically, at this point in the year, are exactly where we started the year. In between the beginning of the year and right now, we've seen rates go up and slightly come down, but most of the entire year has spent above where we are right now currently with interest rates. We are now starting to see the Feds lower their benchmark rate, which has shown improvements for mortgage rates, with maybe some promising news that they will continue to do so, which could be an indicator that finally we're going to start to see some relief in rates, which would be really wonderful, especially for our blood pressures.
I'm sorry, Mr. Whitaker. I couldn't hear you. What did you say?
I said, God help me.
I love fall. Oh, it's my favorite time of year. Unfortunately, it's a painful part in the market for sellers right now. So the next graph, we're going to go local into the Ada County, Boise metro area, and we're going to look at the active and pending report. Basically, right now, we actually have the largest gap between pending contracts and available inventory that we've seen all year. So that's about 2 homes to every 1 buyer. And we just saw the highest number of canceled and expired listings this last week that we've seen all year as well. 300 homes dropped in price as well. It's just really slow. I think what's interesting about this is that interest rates are trending downwards, but it's not enough to necessarily move the needle, especially for the first-time home buyer. And yet I think there's also this sociological element where people are kind of waiting. Like if rates are coming down, I should wait until they get much better. So I can understand that completely. What we end up right now in is this funny deadlock between sellers and buyers. Sellers who have their home on the market, who don't necessarily have to sell. Maybe they're sitting on a 3% mortgage. That payment's not super painful. So it's kind of easy for them to hold on to it and to hold on to their price. And in the meantime, buyers are kind of fed up. It's a high interest rate environment. They've kind of gotten the short end of the stick the last several years. And so they're being picky, and they can be right now. So we got this little standoff between sellers and buyers. And sellers, if they're not going to get their price, I hear a lot of them just say, I'm going to list next spring, which in my mind, FYI, if you're paying attention, sellers, that starts in February. Just a little piece of information for you, and I can tell you why if you want to ask. So with all of this information, it's kind of just I don't know where we're going to go with this. Interest rates are trending downwards, but it hasn't brought buyers back into the pool. And conversely, pricing isn't coming down because sellers are holding on to their price. We've seen relatively stable, sort of flat pricing over the last couple of years. Every metro is different, but this is what's happening in our metro. I will now speak nationally about how these prices have stabilized and how that's affecting us. In this graph, which is super cool, we have home prices over time. And these little bars show you pricing, and then the teal line is natural appreciation. So every year we should see about 3.5% to 4% appreciation in home value. And that teal line kind of represents where we should be based on natural appreciation. As you can see, right before the 2008 crisis, prices jumped above the natural curve of appreciation, and then quickly afterwards stayed below for the next 15 years. Then 2020 hit, those really low interest rates hit, and then people started bidding crazy numbers over homes. And now, last year, in 2024, we were 10% above the natural appreciation trend. With that information, and then we look a little bit over into 2025, where we are now at 8% above trend. So that appreciation line is starting to catch up to pricing because pricing has flatlined. With a natural 4% appreciation year over year, maybe if prices stay stable through 2026 and into 2027, we'll catch right up to that curve, which is really good. It's a healthy sign. A lot of people have been waiting for a bubble or a crash, and we're just not likely to see it. If interest rates continue to go down, I don't see home buying becoming less popular. So that's just something to noodle on. And always, if you want to stay in loop with the best information in the Valley, please make sure you like and subscribe below. I have a really exciting announcement coming out next week, so make sure you stay tuned. And I'd also like to extend a nice little invite to our Halloween party. It's probably the best party of the year, if I do say so myself. And it will be Saturday, November 1st. If you would like an invite, leave a comment below and I'll make sure you're there. My costume's going to be epic. See you next time.